The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, right here on TFNN.com. Coming to you live inside the eSignal platform and on your mobile phone at TFNN.mobi. Let's check out where the markets are trading at right now. We have the S&P is currently down 9 points. And Russell also in negative territory, down 8.6. NASDAQ down 25 points. And we got the Dow down 61 on the day. We'll get on over at our metals markets. Copper is currently down a little over 0.5%. Gold up a little over 0.25%. And we got silver is pretty flat on the day. In the energy sector, oil is currently up 44 cents. We got natural gas down 4%. So continue to have those massive swings on the natural gas sector there. We got, looking on our ags, we got corn is down $4, down over 1% on the day. Soybeans is down about 2 points. Pound dollar up 66. Euro dollar up 29. We got the euro pound down 6 pips. A dollar franc down 19. Dollar yen's currently down 70 pips with the euro yen down 42. Aussie yen is down 93 pips. Aussie dollar is down 30. We got the bonds is up about 0.5%. Dollar index is down about 0.25% on the day. So King dollar showing a little bit of weakness on the day. All right, well, that gets you caught up for your current mid-time lunch market wrap. Some of the top stories on the day right now, U.S. stocks, Wall Street sort of flat after Japan and the China biotechs climbing on up. But I did see a little story about some of the restaurants getting hit there over at Yum Food Brands and all that, getting knocked down after some bad stuff coming on out. And then we'll get on over Canadian stocks. Of course, we're seeing them, now going into the flat side of the negative side of the day. Some of those McDonald's and everything else, the different companies getting accused of using bad meat over there in China, so under a big investigation. Canadian stocks right now, TSX dive into a 7-week low on the oil prices. And so, just continuing to decline. Here's one of the reports on that from Reuters. Moving on down, getting hit pretty hard. And even this morning, looking at the oil charts, was showing a pretty consistent drop that we have to, just to keep our eye on. But that market just keeps moving down. Doesn't want to let up on that continued decline. But, it moved down nice and solid today. And we got to take advantage of some of that move on with that southbound movement there. So we'll review some of those moves here in a second and go into a little more detail for you. But I guess we might as well, if we're going to start off with something, go ahead and start off with oil. So let me get an oil chart on up. And let me grab that one, put it on the screen over here. We'll go on. Pull that up. Let's see here. Give me 1 minute. And sometimes it just takes a second for all this stuff to open up and render up when you're live here on the show. But we'll pull oil up right now. And I'll just get on a 5-minute chart. That'll make it a little bit faster for us, 5 or 10 minute chart. And then we'll add a few bells and whistles to it along the way. All right, so while that's rendering, get this up over here. There we go. All right, so you see that nice, smooth downtrend. And let me go in and put the trend catcher on here. Pardon me. And I'll get that up. 1 second. I'm trying to get it working here. Let's see. Put this in. And we'll go and look at the deviations, where we're at on those, some things you might need to be aware about and thinking about with that. And add in the deviation levels, deviations. And let's go ahead and put on expected volume as well. Right there. And then once that loads up, let me disconnect this for a second. And that ought to load up on the chart. Nice and clean. And let's see here. Now let's back up a little bit further out to 10 minutes since we're looking at volume with it. And then zoom in on the morning. Zoom out on our bars here. And so as you can see, we get this nice downtrend and starting to back off. With it backing off right there, what can we do with our, I got deviation levels on there twice. Let me remove one of those. Kind of deviation levels back, see where we're at. A little bit of chop in there this morning, but it came on down and moving down pretty solid over there. So right here at 120 coming down to about a 2 deviation marker. I'm not going to double check that, but that is a pretty solid move on the way down. Let's see here. So, obviously expecting it not to continue much further whenever we've had that kind of decline in the market. And, that's a couple of the things I want to look at with you on the oil was to go in and go, hey, what are our expected moves? Where do we expect this chart to go? Where do we think the future outlook is? And so let me walk through. I have some notes together on the day trading plans that I've made. And right over here, if I pull them up for you, we can walk through those specific notes, okay? And give you that one, because I know a lot of people are like, where's the oil going? Is it bouncing? Is it falling? What is it doing? Is there something we need to be aware of on the deviation levels? What's the target right now? I know Larry called it going down to 50. It looks like it is definitely, obviously working towards that goal of getting on down there. And so let me dive into that with you. Looking at oil right now and what we see as far as oil moving on down, we are looking for a move further down here, and I want to get the specific note out to you. I know one of my other traders was talking about it as well. But basically prices are very oversold, but as we keep retesting these longer-term support levels, and we keep breaking through them, such as when we break through 63.72, that means 63.72 really was the main support level. And we did break through that this morning right here, 63.72. You'll notice how it sort of broke it, hit the 2 deviations, which is a pretty massive move on the day, bounced up a little bit. Where do we think it's going to go from that 63.72 level? Well, the 6-month bear trend, if you back out with the 6-month bear trend, obviously there's a dominant price, and it could collapse on down to 62.70. 62.65 there, that range. We got pretty close to 62.70. We're about 30 ticks off. Look at the low right there, getting down to just around 63. That holding at the moment. But next level, 62.70, and then where are we going from there? 61.30. Okay, then we'll go on down to 60.10. That'll be our next. It'll stop, and then down to 58.75. Down to 58.35 right now. So those are sort of the major steps I'm looking as the markets continue to decline over each day, and where we're looking for it to go down. So again, that's a move down to, right now we just got to break below the 63, nice big round number. That takes us to 62.70, then down to 62.30, 61.30, 60.10, and then 58.75, and down to the mid-2009 lows of 58.35. If we back way out on the charts and look at that. So let's pull up a bigger time frame chart, and what we'll do is we'll open that up, and let's see here. Let me maximize this cell, and I will pull this out if I can detach it. There we go. Just going to use Thinkorswim just for the back end chart here. I know we got users using all different platforms: eSignal, Thinkorswim, NinjaTrader. But anyway, so let me maximize that. We're going to back on out. Let's look at a rolling CL contract. And then we're going to go back, look at, weeklies here, see how much we can squeeze into one chart. How much will let us back out to? Let's see. We'll go back to monthly if we need to. And let's see, how far back is it going to let us go on a single chart here? Went back to 14. What more than that? Let's see. Let's zoom out as far as it'll let us. And I don't know if they're bringing us information that far back. So if they're not, then I guess I'll grab an index chart. 1 second. Okay, so give me 1 second. We'll load up a little further back oil chart. And I have this set to auto merge. And let's back it out to a weekly view. It's real simple. And see if that will get us the data. Okay, so once that loads up, we'll pull it up, and then we'll go through the oil chart, looking back at those 2009 lows, just so you can sort of see what I'm seeing. What am I looking at as far as our moves down and where we're going to on the next level. Having those ideas of where you're looking for the market to head to when new markets open up, whether you're trading futures and you're looking for those, there's those resistance levels along the way, which could be, key points where it little stops, it doesn't break through, but pulls back and then breaks through some volume. That can give you that additional confirmation that you need in order to continue with that trend if you're directionally trading or if you're looking for, additional entries along the way. In addition, if you're trading on an intraday basis and you're looking for targets, out of the money binaries, in the money binaries for resistance when to trade against that, or even the Nadex spreads, or positions where you may want to hedge off. Obviously the round numbers are points where you're going to want to, hedge off like a $63, position, which we're going to hedge off because you expect the market to bounce off the round numbers. Why? Because psychology. Just people place orders at round numbers, like at 63. So there's a lot of orders sitting right there. If it breaks through those levels, then you can see that. So how do you know how important that round number supposedly is? Well, let's see here. Oh, man, I still don't know if I'm going to be able to get enough data all the way back on these. See if I can get more. Let's see. I need about 3,000. Let's go for that. All right, so it's still pulling. But once that gets done, then we're going to go in and see if we can pull that up on this chart. And I go a little further back. See if I can get a little further. And I'm trying to get just back to those 2009 lows that I want to show you that I'm pulling on the chart. I'll bring that back up here in just a second. I'll have it up. It's loading right now. Y'all stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. And so we were leaving off, we were talking about the mid-2009 lows, not the 2009 lows, but the mid-2009 lows of oil, and looking at potentially targeting that area right now. And for oil, sort of the next objectives here, and that's in line. It's just taking its sweet little time to get on down there, but it is definitely moving on down. And the price levels I was going with you through specifically were looking over at a move on oil right now. I'm looking at it. It's right now it's trading right around 63.06 is the low, with the market sitting right there at 63.34, and hitting that 63.06 number today. And once we break through that, going on down to 62.70, 62.30, 61.30, 60.10, 58.75, and then on down to 58.35. So let me sort of bring this up. I'll try to show this to you here. Pardon me. Back up as much as we can. And going right in here into, about the middle. We got June, July, and coming right on down here to the areas of the 58.35, lows right there. And 58.32 actually is the low. And right there on July 17th week of 2009. You can see that's where minutes run up. It popped down to that. Kept going up, up, up. And I mean, this is a challenging thing. When you start making these new lows that you haven't seen in years and years and years, you have to go back and really dig back into historical data to see where each one of the levels are, where the price had some real resistance going on. And I mean, I have to back out even to weekly charts on these things to even see it. And we've been on this solid downtrend here since, what is this? We got really July 11th of this year. And it's just been, heading on down ever since then. We have not turned around. And let me see here what I can do for you on that. Let's see. All right. But it's trying to really zoom in on that and look at, this move down. Going on in here and just a solid, wide down right there. But we have not yet let up on that trend to say, hey, the oil, the move is possibly over, or it's going to start taking a break and doing a retracement. I'm waiting on it to break back above that trend line there for that to take place. And looking on over here, I can see that we had this dip right to this level. So that's why I said, ultimately I'm looking for a move. Obviously, it may not happen today. It could happen. I mean, oil has had $3 or $4 moves, but, this week, is it realistic? Yeah, it could potentially hit on down to 58.23. If the move continues to, drop down, it's going to break that 63 number, and then we'll have probably another heavy hit on the way down. Where we're going to go down to there, I'm going to look at where this bunch of orders, gathered up over a period of about, 4 to 5 weeks here. So we're going to be looking right around the, 52, 53 area, probably the next stop. After we've got on down to, 58.35. Now, obviously, I'll give you some more levels along the way, but that'll be the next big, right now the next big number we're looking at is 58.35. From there, the next big number we're going to be looking at is right at 53. And then, we'll just keep going down as it keeps going further and further and further back. And, got to pull out, some of my metastock charts and stuff to start getting some of this data that far back. So, because we're really pushing it on all the other platforms here. But anyway, so that lets you see. I mean, you got to be able to see that far back to have realistic goals. And you face the same issue on, obviously, major up moves that happened years ago, or if you're at all-time highs. Where are those orders bunched at? And, so knowing where the orders are bunched at, be able to look at that historically, because, the big institutions are looking at those numbers historically. And we all remember the big, skyrocketing oil and everything else going on back then. So there's plenty of movement in history to see where the orders have been placed. And so this is just one of the many things that you can do to help you out, things that I do when I put together my plans. Obviously, I want to always check my risk. I want to look at some current things. I want to look at volume. I want to look at current day trend. I'm now as I put together day trading plans, things like that. And I want to make sure there's some price action confirming what I'm looking for. I'll look over at time and sells. I'll look over other things before I just hop into a trade. And first thing is to have my plan for the day. Second plan is to watch, execute that plan accordingly, but make sure there's nothing that I see in the markets that causes me hesitation. And I'll talk about some of the ways that I limit risk on those when we get back after this break. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. So, like I said, going over oil and some of the different things you can look at in oil. And let's see here. There's a lot of little things, but specifically, going back and looking, again, like I said, at historical prices. You can also look at volume and just regular volume. You have to go through even full expectations on it, but just, the good old VOL indicator and pulling that up and sort of seeing where high volume weeks have occurred. If you look at this over the past weeks, here, let me add in just a little toolbar shortcut to help out on some of this stuff. Here we go. And, let's go down to, sort of pick what are the higher volume weeks we can see, or we're really rolling out a majority of the days. But I'd say right there is pretty solid. And then we go up and just, add a line. Look at these. And go, okay, well, where were these levels? So, there's a level. I'm doing this sort of just, pretty quick. I'll spend a whole lot of time. And even though it seems like the levels are really close, that could be a $400 move. So you don't just want to discount it because it seems close. And just, drawing it on the close of the, the week there. And these are just giving me some, what you could say weekly, levels right here, right in between. Very simple method. Right there, we're basically getting confluence, same level. Right here, we're within like ticks of the same level. So that, tells us something. So something, definitely worth paying attention to. We go on over here. We're getting just exceeding volume all the way up. So we got another one there. Another one there. Basically came back down and closed down pretty close on that bar. And just sort of moving forward, just looking at where was the big volume. See that big volume? Look where it came right back down to. This big volume bar came right back down to this exact same magnet. Okay? And just hesitated right there. Going forward, where did this big volume bar go down to? Came down a little bit lower than the previous magnet and broke it with some exceeding volume. So I'm going to give that one, whenever I break a magnet with a lot of volume, instead of doing it, I'm going to let that become my new magnet. It's coming on down here. This goes up, moves up. We're basically right within you can say a range right there. So let's go ahead and move forward. We got another one coming right back up. See, about 3 times now, and 2 of those were hitting like right on that level. So I'm going to put that right there, especially since it's above us right now. Going on through, looking a little bit further forward. And we just really got our first big magnet right back here. I mean, it took a while. Like, we didn't really get a massive magnet level of that level in oil for really the last couple of years. So really picked up here back in October. Just the data time display there, October. So came on down here, set this level. We got another level set right here, which, by the way, we set all the way. Let's see, we keep going. These are one of these levels we set way back in 2009. So now we're starting to hit this volume like we were hitting back in 2009, and we come back down pretty close. So, and right now we're not really hitting those levels that we came pretty close with over 10,000 contracts right there in the week, right there. But busting on down and still not showing any kind of, resilience to move on back up. So, now we can go further back. We can load more historical data. Obviously, that's going to help us get in there. And you go in. Obviously, these are what we're talking about, that low of mid-2009, shooting over here for, these levels. So that's sort of our next big move down. And like I said, I gave you the little areas in between. Looking at 6270, 6230, 6130, 6010, 5875, but coming on down really to the 5830 level. Obviously, you can sort of see without even having to look at volume or anything. You ought to be able to get a pretty good idea of where the next level is going to be. Right around 53 over here, just by looking at where all the orders are bunching up. There's going to be obviously 2 big areas right there. We had volume, and that helps even more. And it seems like a whole lot of lines on a chart, but understand we're looking at weekly charts. We're looking at, what are we looking at, like 5 years right here of data. So when you zoom in, you're not going to see all these lines. All right, so you put all these lines, you draw them all in your chart. Then you go in and go, okay, now I want to look at current. And you got to give it a second to let the data load on in there. I back out a lot of times whenever I'm doing certain data in order to allow it to... I've learned disconnecting from live data is a fast way to load historical data. Like, you go in and you load a whole bunch of it, and you pull it up and disconnect, and you can change a lot of settings around without having to wait for it to rebuild every single chart. And it can take a little bit, but it's just one of the faster tricks when you want to work with a lot of intra-tick data, intra-volume data, and things of that sort. Anyway, so while that comes on up, we'll move on over to a few of our next items, but I'm just trying to give you some ideas of how I back up, how I look at where these levels come from, the specific little, tips and tricks along the way that have helped me as a trader learn how to take advantage of them. All right, so we got the oil there going on down. Oil trade at US $65 a barrel for 6 months is what Kuwait Petroleum is saying. Well, they're already a little bit off on that chart. So now it's down to 63, went down to 63.06. So Kuwait Petroleum is not necessarily accurate in their analysis. It's already breaking that. We got oil at a 5-year low, concerning that funds may resume oil selling. So obviously they're doing so. We saw where they're looking at potentially selling it to by looking backwards, because they are looking backwards also. Gold on a slow rise towards 1,200. So gold moving on up. We can dive into that here in a moment as well. Check that out. And let's see here. Let me bring up a gold chart for you. And let me pull it on in. Here we go. And without getting that to be a massive chart there, bring that up. Back this over. Here's our 10-minute coming in on the 10-minute levels. We're looking at, see, now the levels don't look so overwhelming. We backed up on the weekly. We looked at them, sort of saw where they're going to, where they've been. And that's just looking at 10-minute, or not looking at weekly volume. So weekly magnets, sort of seeing where those were at. And we saw it bust through that level pretty solid. So that does help us confirm that move on down to the 58, 30 level that we're looking at next on oil. But gold did obviously bust up above 1,200, went on to 1,220. And then this week, where is it going to turn to? Let's try to dig down a little bit deeper into that one as well. And go, where do we think our overall longer-term view on, gold and oil and all that can be? And let me pull that up. I will show you. And put that on the chart just to get a nice trend view on the oil charts. So it's popping up, but it looks like it's looking to turn back over. And again, this is just looking at the daily bars, backing up in a little longer-term analysis. But looking at the daily bars over here, going, what do we see? I mean, right there, we got a nice flip and switch on down and grabbed a good 30 points out of oil. Right here, popped up, pulled back down, give us a little long, but I think we're probably going to back off on that one. Don't want to look too much more for long. I think we're going to be pulled on back down right now. We're right at 1,200. You back up, look at that level. What is that doing for us? Let's back up a little bit further. And so this is one of those charts where, again, you got to go back. You got to pull more history. And so go back. I'll load up my what's called continuous chart, and then ninja, that's GC pound. I'm going to go back. I'm going to look at weeklies. Let me see a little bit more there. I'm going to pull back. I'm going to pull up some volume and put that on up. Let's see here. Got to give it a moment and then say, ooh, okay, now we finally got some levels below us. That's good. Let's add some volume on. Just good old traditional volume. Be quick to load. Shouldn't be too long anyway. And VOL. Okay. And right over here. So what we're doing is we're seeing on this. We are getting a good move. Let's see if we can make that trend catcher maybe give it a little bit longer, smoother period. Okay. Let's move some things out there. Get rid of those little one-off days as much as possible. All right, so we still got, it looks like gold heading down, but this, like I said, one of the rules is, hey, it's rising up to 1,200. Obviously, it busted 1,200 already. Pulled on back down off of that. And now we go back, we look at volume on it. And we go, okay, well, what volume levels can we get? Can we get further? How much more data can we load in here? And so put like 5,000 days back of weeks. So give that a moment to load up. And then because you want to get that clear perspective on what high volume is. Where is the market likely to bounce on down to? Where's it going to go down to? And if we can find some areas with some high volume, like in comparison to previous day's volume, then we can get a lot better idea on the trend of the volume, if it's rising, if it's declining, and if it's hitting magnetic price levels, meaning like where really, really high volumes occurring. And it looks like right now we're getting back to 2009 on the chart. So now we're going to go in here and, again, throw that toolbar shortcut on there. Makes life a lot easier when you're doing all this stuff. The ability just to quickly draw on the chart. And let's see, right down to here. Like you want to cover a lot of bars, but not too many, or it starts to just become useless. Okay, so we had some, like right up here. These are basically closes on the same, and up close, down close, pretty much around the same level. Go right over here. Obviously, we got one down there. Right in here. Another one right below it. We're going to go and grab that lower price. Right down there. Let's see, going on up. Above us, we got a level here. Going on to this level. Right in the same area. Came right back down to it. So it's closing within, like a couple points of each other. Starting to move on up. All right, so that gives us areas above, areas below us. So really, if we were to break down, where do we think we're going to break down to? Where do we think we're going to move up to? And you can see, like, right there, that's closing on that old historical level again. Comes back down right there on that same level. So you can see where these levels, like, really start adding up. Now, this one, we got a little bit more volume right here in the middle. It's sort of that range that seems to be stuck in between right there. But anyway, so we pop back up here. Where could we expect the market to go? Well, this gives you a good expectation. If we are able to close up with some strong volume, we could pop up back up to 1350. But if we do decide to break on down with some volume, then we have a move possibility to go on down lower to around 1065, 1070 right there. So that gives you, so that we're in this range. You almost want it to break out of the range, help you pick one, especially if you do some with the volume. But that gives you two areas to go for. And again, these are weekly charts, so these are not, something you expect to happen in a couple days. But for you longer-term traders, you're looking at it, you're like, okay, we're in the downtrend, so I probably want to stick with the down move, right? But notice, like, right down here, it comes around and bounces up, breaks above. Okay, we go long. Where are we going to? We're going to here. All right, comes down, goes short, targeting this area right here, goes short again, targeting this, targeting here. We keep going. These areas were here before, so this area like here was here before that. So we had that target. And then, so it's like, okay, well, if we can see it break on down below again, then now that's when I want to go down as target, 1059, 1060 for those larger moves that we can go after. And again, these are longer-term time frame trades. So you got to keep that aware. Futures are rolling over. You got to make sure you deal with the rolls and all that. Speaking of rollovers, we do have some rollovers coming on up that you are going to want to be aware of. And so quite a few of them. And so let me pull that up for you. We'll go into the rolls. I got the roll calendar built right into the Nadex scanner to make it a little bit easier for you. And let me pull that up for you. We'll look at it, talk about it, and make sure you know how to do the rolls inside of Ninja platform. Every platform is a little bit different. So depending upon which platform you're using, of course, the process can differ. But if I go over to the Nadex information tab inside of the scanner, okay, then we see that all the indices are going to be rolling over this weekend. And we actually have the Nikkei is rolling over today. So basically when it opens back up at 6 o'clock, then we'll see it roll over to the new month. If you roll over, if you hover over the contract, you'll actually see it. It'll be rolling over to March on the Nikkei. Or Nikkei, or whatever. I've heard every experienced trader I've talked to has pronounced it a different way. So gotta find somebody from Singapore that can tell me. Go over here. We got the S&P E-minis, and literally I've heard every different version of it. So until I talk to somebody who actually has been in Singapore, but I got a few traders over there I know. I'll have to ask them. But I think they say Nikkei is what they say. Anyways, we got March going on, March 2015. So we're rolling over to that. So this Friday. We'll talk about when we get back. This Friday, you need to roll over your contracts. We'll talk about how to do that. Stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN has just announced a special sale for the Gold Report for a limited time only. To celebrate the 660th weekly issue of Tom O'Brien's Gold Report, that's more than 12 years, TFNN is having a special one-time sale. Right now, you can receive 60 weeks of the Gold Report, that's 14 months, for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, half off the regular monthly price. By taking advantage of this special offer, you also get a signed copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Not all gold stocks are the same. This offer is valid for current or new subscribers. All the details are on the front page of TFNN.com. The sale will be over before you know it, so act now and lock in this incredible price by visiting the front page of TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. And just go through several things, looking at the charts right now and seeing what possible trades we have sitting out there that we can take advantage of. We got a nice long on the Russell today, came on back down. And one thing I've been learning to do, on even using the diagnostic bars on these day trading plans lately, and it's waiting for the bar to close in the direction. May give up a few ticks, but the flip side, actually using the bar itself as a stop. And so, for instance, over here, going in, it says exit short. So I go enter short, I go short right here. My stop is up at the high. So I put my stop right there at the high of the bar. And then I go down and look at like an MVP or trend catcher, move that down until we finally, get hit on that, or the, the direction flips there. It allows you to go for longer trades with tighter stops. That's the big advantage, is that tighter stop. Like right here, it breaks up. Okay, small loss, move on. Don't re-enter because it's a down closed bar. Going on over here, it's coming down. Finally, we do get a down closed bar. Take that down close. Have a nice tight little stop right there. Above this, we do go down. We hit target 1 on that. We come on back down. Of course, we're at break even at least. Come back. We get another down closed bar. It's like, really not any where to go on that. May back off, may take it, but it's over 50% to target 1. So I'm going to back off. This one comes down. It flips right at target 1, shooting for target 2, and I still got a negative bias, whether I use MVP or whatever on that. And I'm like pulling up the MVP on here, show that for you to give you an idea of what I'm looking at. Still got that negative bias of the MVP. And so when I get that down close right under that target 1, I was like, let's use a really tight stop again. Use a stop right here. Let's go for, target 2. And use that MVP to help me trade between targets, but combine with the diagnostic bars. So in summary, what I'm looking at is combining diagnostic bars, so which are sort of a Renko style, but a lot more advanced bar in accuracy for the open and the for the high, the low, and the close, for that accuracy that you need on them, and just again hopping in, waiting for the bar to close below a level. Okay, so down close, up close, whatever. Having something like MVP confirm that direction. All right, already. So maybe it's already in a short. I'm going to play between the targets. And, for instance, ES, I'm looking at 6 ticks. TF, I might look at a little bit larger tick size. And, maybe I'm looking at 12 ticks or whatever on that. And it reduces my risk to, maybe $100 between my entry and my stop versus having the larger stop loss. And then I go in and I can just go down and target that next target. And so enter, okay, down close, bar flips, go short. Awesome. Put stop right above here, and then go for the target. So it's a big thing about the whole idea being how can I reduce my risk as much as possible, but allow me to capture those extra moves that keep flowing there. And the target levels are awesome, but also, you need something to help confirm. What kind of price action can I use to confirm on a trade? So I don't just go in and buy on a, market that's flying down. Don't go in and sell on a market that's, just flying up. And so you go over here, you got this, inner log. It's like, okay, well, it's going up. That's good. So let's put a stop right there. It moves 50%. We actually get to end up moving our stop to what I call break even. Now, break even, maybe I entered a few ticks above because I'm using diagnostic bars, but I'll move it to at least the original entry. So now I have 2 ticks of risk, 3 ticks of risk on the trade. Once it moves 50%, if I get knocked out, I'm going to be okay. That being really the main idea is how do I limit my risk? Well, I can use things like a diagnostic bar. How do I confirm my direction? Again, I can use a bar for that. And then how can I get some more entries? So bars with like the MVP line lining up. All right, I hope you all have a great day, and I will see you Friday on the Diagnostic Trading Hour. I'm heading out to Chicago to meet with Nadex, CME, and CBOT this week. I hope you all have a great day.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.